One. Welcome back, everyone. Greg Helbeck here. I have a very special guest today, Cal. Cal, how do you say your last name in full?
Ewing.
Cal Ewing.
Patrick Ewing.
Cal Ewing.
Yeah.
Just Patrick Ewing. There we go. Cal Ewing from Calgary. See, I wanted to ask you that because I never want to butcher someone's name. That's never good. So
It could be tricky, I know.
yeah, Cal Ewing. There we go. So Cal is an investor who actually lives in Canada. He lives in Calgary, Alberta. And he buys and sells properties and buys and rents properties down in Texas. So we're going to cover virtual investing extensively today. So without further ado, Cal, would you mind telling the listeners a little about your background, a little bit about you, and we'll start there.
Yeah, absolutely. Like you said, Greg, I live in Calgary, Canada. And I grew up on a cattle ranch in the middle of nowhere. And I think the fact that my parents were both entrepreneurs, worked for themselves, I just grew up hating the idea of working for the man. And so I read Rich Dad, Poor Dad in my 20s, and I was like, holy, this is so much better than where I'm headed. And at the time, I didn't know what I was going to do with my life. I ended up getting a degree in geology. And while I was studying for geology, I was studying Rich Dad, Poor Dad stuff, trying to figure out how to get out of the career I was going into, if that makes any sense.
Yeah, you were trying to go out before you got in.
Yeah, exactly. And so I just found as a Canadian, there's not a lot of resources, just because we're a smaller country, smaller population. Most of the training and resources are American, right? Like it's really easy to find that kind of stuff online. So I, pay for courses and things like that, and it's all American based. And then I try to apply it here, and it wouldn't work the same. So finally, I'm like, well, then why not just go south of the border? It's warmer. My dad's dual citizen. So yeah, I started buying houses in the US in, my mid to late 20s is when I got my start. So.
Okay. So you were going down one path, and a lot of listeners have probably read Rich Dad, Poor Dad. If you haven't read it and you're listening to the show, do yourself a favor and get the book or download the audio book and listen to it or read it, because it's a real paradigm changing book. I read that book when I was 20, so it wasn't too long ago. And I remember I was reading it and I was like, oh my God, this is like, I have never heard of any of this stuff, but I knew exactly that was what I was going to do. So,
well, they don't teach you, right? You just
no. And that's the thing, man. That was the thing with me. It was like, I was never like the smartest dude in school. Like I wasn't like failing out of school, but I would get like C's and B minuses. And like, I just thought like to be quote unquote successful, you had to be really like an academic smart person. And and I just started to figure out like that is not the case whatsoever. Like sometimes that can actually, there's a really good book kind of going on a tangent here called Barking Up the Wrong Tree by Eric Barker. And he basically like breaks down the science of success with like statistical data. And he actually talks about sometimes, he actually says the valedictorian, like statistically speaking, the valedictorian has a lesser chance of becoming wealthy than like someone who like, he has some crazy study, like basically like valedictorians are not statistically going to become like as wealthy as like an entrepreneur or something, because they're so used to following directions and going by guidelines, which isn't bad, but that kind of hinders their creativity and their ability to take risks, which you need to do to be successful in business. So little cool book there. So yeah, exactly. Counterintuitive. So hope I didn't offend any valedictorians listening anyway. So let's kind of get into this. So you're in Canada, you're trying to do a lot of this American investing, and you're trying to do it in Canada. And so what was like the day where you decided like, you know what, like I'm going to have to freaking take the jump and do this, because now you're doing big things down in Texas. So we'll get into that and we'll unpack all that. But what was the main thing? Like I know Canada's different. I played a little bit of hockey up there. What was the biggest issue you were running into in Canada that hindered you from being able to execute on these systems you were learning?
Well, having to work, really. So as a geologist, I had to be either out in the field in the middle of nowhere on a drilling rig, right? And a lot of people in Texas have the same problem. Or I was working at a night job, so I'd work 12 hours at night. And it's pretty hard to run a real estate business when you're only awake when all of your clients are asleep. So I just finally got to that point. I was like, man, I either have to decide and commit to being a geologist and having that career, which I don't want, or I got to friggin' just give her and jump into real estate full time. And so that was what pushed me. And at the time I was toying with the idea of buying tax deed properties, so tax foreclosures down in Houston. And I just found that strategy, even though it's a good strategy and you can get good deals, it was just slow moving, really slow to grow. And so at that point, I shifted all of my strategy towards more wholesaling and virtual wholesaling, obviously, and did a little bit of fix and flip. And I'm doing some owner financing types of deals as well. So
awesome. Love it. Love it. So in Canada, could you technically pull it off in Canada, or can you not get lists? I know we talked once on the phone and you said there was a few major issues, if anyone's listening.
Yeah, the big difference is our prices up here are so inflated. It's kind of like California. Like I was just telling you before we started, like a condo in Vancouver is like $1 million. So that's one thing, is the price. It's like you just need more cash to get in on deals. Yeah. They're harder to find up here. It's more highly regulated up here. So some of the strategies that a lot of people watching this are doing, you can't even do up here. And so those are the main hurdles. And it's just, there's so many properties. There's so much distressed real estate in the United States. Yeah. To me, it just makes more sense. And like, I figured like it's a big challenge investing across border, but it's the same as you, Greg. Like you're investing remotely and you just have to overcome those challenges, right? If you want.
Absolutely.
So
totally. It's totally possible. Yeah. I love it. I love it. So good stuff. So now let's kind of, fast forward to, so where are we at now? So what does your business look like? What cities are you operating in?
Sure.
And, let's kind of unpack what you got going on right now, because, you got a lot of good things going on.
Yeah, so I'm sure you can agree with me that the biggest challenge when you're investing from afar is, boots on the ground.
Oh, yes.
Making sure you know what you're buying and that kind of thing. So I went through a few different people. The first boots on the ground guy I had, he was in my fantasy baseball league.
Oh, that's a good time.
He happened to be in Houston, and we'd made a few trades back and forth, and so we talked over email. And so I was going down there to look at some auction properties, and I'm like, hey man, you want to just grab a beer? And from there it went on. He started driving me around and looking at all the properties I was considering bidding on. And he knew a lot about the areas. And I was like, hey, do you want to be my boots on the ground? So I just had nothing. Like I was just
you gotta start somewhere.
Trying to figure this out. Yeah. So he was my first guy, and he would bid for me and things like that. And eventually it didn't work out, but you got to start with that boots on the ground presence and figure that part out if you're going to invest from afar. So I've got that now. And so I just really focused mainly on wholesaling as my bread and butter. And as you can probably attest to, it's just the easiest way of doing it when you're not there every day, right?
100%.
Yeah. And I had I think a negative stigma towards wholesaling when I was getting started. And I've had a few different mentors that helped me along the way. And I was like, no, man, I just want to fix and flip. Like, why give away all the profits? And a lot of the wholesalers that I'd seen, they weren't even deals that they were emailing out.
Yeah, they have a bad reputation and they sell shitty deals. Yeah, I get it, man.
Yeah, and I was like, I don't want to be that.
Yeah. A wholesaler? Like that.
Yeah, it does have a negative, and it's too bad because people that don't really know what they're doing, I think they ruin it
for everyone. Yeah.
So I started fixing and flipping, and I found it friggin' hard. I mean, it's hard enough when you're living in the same market. And so I wholesaled my first deal, and I'm like, okay, this is awesome. It was a duplex down in the Houston market, and I ended up making a mistake on it, and I got it under contract for what I thought was too high, like market value. Oh crap, I messed up. But I fired it out, and sure enough, I made like 10 grand on it anyways. And I was like, this is the easiest thing ever. And so, now I'm just at that point where I feel like every investor should have wholesaling as in their back pocket, because like, if you find a deal that you can't buy or doesn't fit your model, if you can wholesale it, I mean, there you go, right? There's your cash flow to keep your business running, to keep your marketing going.
Absolutely.
I really love it.
I agree with you 100%. Well, I actually do probably. Right now, we're shifting a little bit. We're doing a little bit more buy fix and buy wholesale, which we could talk about. But, primarily I've been wholesaling. I mean, I got started. I had no money. I was completely broke. I was 20. So I had to wholesale. I had to generate capital basically from nothing, from my time and from my effort, from being a good marketer. And guys, if you're listening right now, you can do this business with no money. I got started when I was flat broke. What about you, Cal?
Yeah, well, I started with some money.
Okay,
and I got some friends together and stuff. We bought some tax auction properties, but then after that was used up, and I was back to square one. And I can't get financing in the States, like conventional, because I'm Canadian, right?
Yeah,
so I had to start without that option. And I think it was actually a blessing for me, is because I had to figure out, okay, well, I can't go to the bank and get a loan on a property. So I got to figure this thing out. And so I've done no money down deals, sort of. I mean, we've had to put marketing dollars in, right?
My favorite, yeah.
But that's my whole career. I've done no money down deals. Like, that's what I do. And it's not this unicorn that people think it is. Like,
no, it's real. It's real.
Figure it out.
You know what? I'm glad you're saying that, because I the fact that you're doing no money down deals from Calgary in Houston, Texas. Guys, if Cal can do no money down deals from Calgary in Houston, you can do a deal in your own backyard. You don't need money to do this business. You need time. You need to be scrappy. It's not easy. Doing a no money down deal is not going to fall into your lap. You need to know what you're doing. But so Cal, let's kind of hit on that real quick. So no money down deals. What are you doing? Sub twos or wraps or owner financing? What are your favorite no money down deals?
Sure. So about a year and a half ago, I was doing some remodels as well as wholesaling, and I was putting my money into marketing only.
Sure.
So what I'd use is hard money to buy, and then I'd use a private lender as my second lien lender. And so I was using entirely someone else's money to do these deals, right? And I'd borrow the holding costs, everything. So that was for flips and wholetailing as well. So with wholetailing, if you don't know what that is, it's you're buying a house at a discount and you're just turning around and listing it on the MLS, and you're just selling it as is, right? So you're not putting any work into it. And sometimes you can do a double close where you don't even need money, but other times you have to close on it and then wait till you can sell it. And so you have to have some money, right?
Yeah.
So both strategies, I was just using either hard money or private lenders. And then subject to, whenever we can, if we can take over the seller's existing mortgage, we do that. Owner financing, if the seller is willing to owner finance, then we do that. So
awesome. Absolutely. We're doing a subject to deal. We just got the offer accepted, and it's a pretty sweet one, but this will be my first official subject to, because I've always been kind of bread and butter wholesaler, light rehab, wholesale. So I'm really looking forward to this, because I think it's going to open up a good can of worms for us. So you're doing a lot of stuff, obviously remote. You're doing everything remotely. So let's kind of talk about, if you're going to be doing this. I always I'm a big believer in the 80-20 rule. What's the 20% that's going to give me the 80% in terms of the productivity? So if let's go into something, because something that fascinates me is you're rehabbing remotely, right? You've done successful fix and flips remotely, which is not easy whatsoever. Rehabbing is a pain in the ass to begin with, and doing it across border is like a whole nother. So what are you doing? What are your keys to success? I mean, I'm seriously just genuinely interested. I mean, if we were on the phone talking, it wasn't a podcast, what the heck are you doing to successfully remotely rehab these properties? Because that is just sounds like it could be a potential headache.
It is. I think to answer your question, I'm failing and learning as I go. So I had contractors that didn't turn out, learning the hard way of having my boots on the ground guy who's supposedly watching the rehab and having it not happen.
Yeah.
And then, issues with contractors is the biggest thing. And I finally found the right partner on the ground for those, who I can trust. He's actually a partner in my business now, and he's got the experience to handle these contractors and almost GC for me.
Yeah.
So I think, honestly, I didn't do very well. We rehabbed 2 houses that flooded in Hurricane Harvey. So honestly, it's been getting kicked in the teeth multiple times and figuring out how to get it right and whether or not I even want to do it, to be honest. So I think it starts with the right partner or boots on the ground that can really be your eyes and check on your contractors daily. Because if you leave it up to a GC or contractors, I think you're going to get burned eventually, to be honest.
Especially when they know you're in Canada. You want to try to.
Exactly. Yeah. So I honestly, I'm not saying we're not going to rehab more, but I would not recommend people start remotely if they're going to be doing rehabs. I think you need to know exactly what you're doing in your own market, build systems, and then try remote if you want to.
I agree. So what were you doing? Because you're in Canada. So, if you were in Dallas and you were doing it in Houston, you could always take a 4-hour ride down there. But what were you doing to find a contractor? How did you find your first contractor to rehab a house from Alberta? So what were your steps on that?
I think the first contractor I just posted on Craigslist, investor looking for a good GC to do multiple projects. And I had a couple guys call me. One guy I really connected with, seemed like we were on the same page, and I, did my due diligence about the kind of work he's done. It was higher end stuff. And I was like, okay, seems like a fit. We have the same mindset and that kind of thing, right? And that didn't really go that great. He did a couple for me, and he did a decent job. But then this recent one, we ended up firing him. So
what was the issue? Was he not like doing it? What was his integrity off? Like, why did you have to get rid of him? Like, what was his?
Well, yeah, I think it was more me not setting my contracts up with him correctly. He just went way over the time length. So we were supposed to be done in 4 months, and it ended up at 6 months.
Oh man.
And then he had to go over budget. And finally, he just fired himself. He was like, look, I don't have the money to finish this next draw. And I was like, well, I need you to finish this so that I can get the draw. And he literally fired himself.
Oh.
So my boots on the ground guy took the project to completion, and it worked out. But, those are the lessons that it was very hard to learn from remotely. And that's why I really don't recommend it. I love more the wholesale side of things and the wholesaling side of things now, especially in a market where we're not even sure where it's going to go, up or down. So
yeah, I couldn't agree with you more. It's funny. I had my good friend Larry Friedman from New York on the show a couple of weeks ago, and we were talking, and he's very experienced with rehabs. This guy is like the king of rehabbing, and he's made his fair share of mistakes also. And he said that the difference between really rehabbing and wholesaling is there's multiple points of failure when you're rehabbing, right? Wholesaling, the only thing you can really do wrong is you could, probably buy the house too expensive and have to get out of the contract and look like an idiot, which isn't the end of the world. I don't like doing that personally, but it happens. But with rehabbing, you can buy the house completely correctly. You can get it for a smoking price. But if you have a bad contractor, or you don't do your homework, or your listing agent doesn't know how to sell it, there's so many other, there's retail buyers you're dealing with getting financing. And then the fact that you're doing it remotely, and I don't want to scare anyone away from doing remote rehabs. I'm just trying to be upfront with everyone here. And Cal obviously has got way more experience than me with this. I've only done one rehab like that. And there's just so many more multiple points of failure. So you want to get your footing down. You want to understand what a deal is. How do I make a deal happen? How do I wholesale? And then, if I want to dip my toes in a remote rehab, do one, see what was good, see what was bad, reflect, and then figure out if that's what you want to do. Because clearly it works, but you just got to be extra careful if you have other people's money, especially when you're not living in that market. So before we get into
that strategy, I'd say if you're remote.
Absolutely. Yeah, so before we get into the best and worst deal part of the show, what do you do in terms of going to, like, how often because you're in Houston, so how often, or investing in Houston, how often are you going to those markets? And when you go to those markets, what are you doing on a daily basis down there? And how long are you staying for?
Yeah, so I was only going like twice a year. Now I'm going about every quarter. And the great thing about where I live is the oil patch is so interconnected between Houston and Calgary that there's flights every day. So it's cheap. It's like $300. Oh, wow. But I've got a really, really strong partner down there now. So he's handling a lot of my day-to-day stuff. He's the one that's going out and seeing properties and, doing repair estimates and things like that. So I've got him now, which has made it way easier. And so when we go down, I just like to be able to touch houses and walk through them and see them. And, it's a lot more networking when I'm there, going to meetups and RIAs and things like that. Shooting a lot of like video content just to, for our website and things like that, marketing, that kind of stuff. So I'm really leaving a lot of the day-to-day stuff to him now. And I'm more behind the computer, crunching numbers, handling our marketing, things like that.
Love it. Awesome. Yeah. Good stuff. So once a quarter, you're heading down there every 90 days or so, you're heading down there, making sure everything's good, doing a little branding. Love it. Exactly. All right. So let's get into the back half of the show here. So I want to unpack first your best deal and then your worst deal, and then we'll have the listeners get your contact information so they can add value to you. So, Cal, walk me through the best ever deal from soup to nuts that you've ever done, and like the numbers, the details, the situation, the exit strategy. I want to hear it, man.
Okay, I'll tell you two, just because the one's really short and one's got more meat on it.
I love it.
So yeah, one of them was after Hurricane Harvey, right? There was tons of flooded homes. So, motivated sellers was pretty easy to find, right? And I had tried to wholesale some of the higher end homes, some of the, $1 million homes that flooded, and like just finding the right buyers. I just didn't have the right pool of buyers for that type of property, right? Because we weren't targeting those before the hurricane. So I quickly learned that those deals were not my kind of deals that I could wholesale. But we had one guy that called us, and I think he just saw a Bandit sign, and he had a home that was worth, I think, $700,000. He literally just finished remodeling it. He was proud of it. He just moved in, and it was gorgeous. And then Hurricane Harvey hit like 2 months later or something.
Oh my God.
And so he was going to lose the house, I think, and he was in some trouble. And so we told him, like, we're like, look, we can't move these properties. We're not interested in buying it ourselves to remodel. I'm sorry, but like, it's just not going to happen. And we can't buy our house. And he kept bugging us. He literally was like, come on, just give it a shot. Just try.
We're negative.
And we're like, no, yeah, going negative, right? I didn't even know what that was then, but we went hard negative on this guy. We're like, no, it's not going to work. And finally he convinced us to take it on I think a 10-day option that we try and just market it to our list. And we're like, okay, fine. What's that?
He was selling you.
Yeah, he really was. And we're like, okay, we'll try it. And in 10 days, if we don't have a buyer, we'll walk away and, good luck. So I marketed it to my list, and I had some newer buyers at that point.
Yeah.
There was a lot of out-of-state interest in the flooded properties. So I had some new buyers, and I had it under contract with a new buyer in 2 days. So it was an easy, I think we made $30K on that deal.
Wow.
There were just no hangups the entire time. And it was one I didn't even want. We turned them away. So that was probably the best wholesale deal, just because it was something found us and convinced us to do it.
Wow.
Yeah.
Holy crow. That's
yeah.
awesome, man.
Yeah. And another interesting one. We have lots of time, right? We have enough time?
Yeah, totally, dude.
Cool.
Oh, yeah.
So this is one we did this year, I guess at the end of 2018. And this lady, she was in financial trouble. She had a house that her vision impaired son and his vision impaired fiance or wife, they're both basically legally blind, living in his home.
Oh, smoke.
And so, they had online work that they were doing from their home, but he never tried to get a credit card. He didn't have no credit score at all. And she was basically letting him live in this home. She had another house, and they were behind on taxes, like 20 grand or something like that. And so she was like, I got to do something. This just isn't working. And so she asked if we could buy the house from her and then owner finance it to her son.
The legally blind son.
Yeah, because he had no credit, right?
Yeah,
but he had a good paying job at like Apple or something. And so we were like, okay, this is great, because we've been wanting to do this where we buy homes and then sell them owner financed. And usually you have to find your buyer and you have to find your seller and put it together, right? Yeah. So we're like, this is amazing. We've got what seemed like a qualified buyer and a willing seller. And
yeah.
So I ran my number.
Yeah.
Yeah. And they're already in the house, right? So put a long story short, we got a price that made sense for us. We left a little meat on it for him. So he had a little bit of equity going in, and she signed the contracts. Everything was done. And of course I'm doing this remotely, right? So I get the contract back from the son, and everything is signed. I'm like, okay, great. We're good to go. Well, what happens is I get a call from the son a week later, and he's like, I don't know what's happening, because he can't see, right?
Yeah.
But I can't afford this house. He's like, my mom signed the signature, put her signature on these documents on my behalf, which has happened before because he is visually impaired.
Yeah.
So she wasn't outright forging it, but she kind of was.
He assumed that it was like, oh yeah, Johnny, he totally wants the house.
Yeah. And she didn't want him to leave and move away from the city and stuff. Yeah. So that went bust. He's like, man, I can't afford this house. Like I won't be able to pay the loan payments.
Yeah.
So anyways, that deal kind of blew up, but we still had the purchase contract with the mother, and she was super motivated to sell because she just needed to get out and clear up her own debts and stuff. So we figured out a way for him and his wife to move to a place they wanted to live, and we ended up just buying the home and wholesaling it. But it was a really interesting way of going through that whole process and realizing, remotely, again, having those conversations with the sellers and making sure everyone's on board. It's good. So
what was the wholesale fee on that? Was it a good wholesale fee on that?
Yeah, that one was about 30 as well. So
Woo!
Yeah.
Look at that. Guys, that's real life stuff. You can actually do those deals and make those profits wholesaling. I mean, even in Houston's not like a crazy high-end market. I mean, it's median home is probably around 150, 250. Yeah. And you can make 30K rips all day long. I mean, we just closed down a deal yesterday. We made $20,000 on a house in the hood in Dallas. So, I mean, the spreads are there. You just got to buy them deep. So, Cal, that is an interesting story. Totally, man. Holy cow. So that was interesting. So let's pivot now
Sure.
to the worst deal you've ever done, and share
Sure.
everything you want to share, but let's learn some lessons here for free.
Can I share two again?
Absolutely. Absolutely.
Okay. So here's a lesson on boots on the ground if you are investing remotely. My first boots on the ground guy that I had working with me. So we bought it at the tax auction. He bid for me. We found a house in Baytown. We bought it for $11,000. It had a little bit of fire damage, and he bid for me. And then he signed his name on the documents at the courthouse steps, not knowing that his name was going to go in the deed. Okay. He just thought he was signing off on it. So I bought it, but his name's on the deed when we get the deed.
Oh God.
So that's fine. I asked my attorney, I'm like, what do I do? And he just said, well, we'll just deed it over to you or transfer the ownership to your company. So we did. Well, what I didn't know is my boots on the ground partner at the time had, I think, $60,000 in IRS liens tied to his name. And so the second that he basically bought this property, he now has new property, and the IRS sees this and they slap their lien on my property. So I was actually
in Canada as it snows.
Right. And so I had no idea, and I was actually going to owner finance this house, and we were, took it to the title company. They opened title, and they're like, well, there's IRS liens on this. And I'm like, no. This is all wiped away. It went through the foreclosure process. All those old liens are gone. And they're like, well, these are newer liens. So I'm like, what the hell? So anyways, I found someone willing to take it with the liens in place, the IRS liens. They're just going to keep it long term. But there's something, you don't think to check your own partners and stuff, right?
Yeah.
But that kind of stuff can happen. So that wasn't the worst deal, but it was just something I never thought would happen, right?
Oh man. Well,
yeah.
That's like almost like you wouldn't expect that. Like, oh yeah,
right. I had no idea.
Gloss over it. So what happens if you didn't sell that? What the heck were you guys going to do with that property? Rent it?
Yeah. So with his liens that he had, I think half of them were already, I guess, expired. The IRS, I don't know exactly how it works, but the IRS basically has like a renewal time, and they can reapply it again for another 20 years or something.
Oh,
but they just forget about it, and it's wiped away. So the remaining liens, I think they had another 2 years on them, and then they would dissolve, I guess, too. So she was willing to take that risk because she was going to keep it for the next 20, 30 years as a rental anyway. So she just took it with the liens. So,
wow.
Yeah.
Very interesting, Cal.
There's just so much to this industry, right? That every deal is a learning experience.
Oh man, the more hair, the better, as I say. Because
it makes you stronger and smarter, right? You can deal with stuff.
I couldn't agree with you more there. The more sophisticated. I mean, that deal we closed yesterday, we had to get a sophisticated attorney involved. We had to switch title companies. We had to do adverse possession and da-da-da-da. I mean, it's like you got to do what you got to do to get the deals closed. That's what separates the real investors from the phonies. It's like there's not a lot of low-hanging fruit out there. Sure, if you do enough marketing, you will get some deals on your lap, but that's not how you build a sustainable business. You need to go out and pursue. I like to pursue properties that are hairier because there's less competition,
Yeah.
But there's less competition. The harder the person is to find, assuming the deal makes sense statistically. Like what I mean by that, I mean it's like, tax, vacant, whatever.
Yeah.
I'm going to go as hard as I can to find that person, because when I find that person, not if I find them, when I find them, I'm the only guy they're talking to, most likely, assuming that, for the most part, usually you're the only guy they're going to talk to. So that was an interesting one there, Cal. So what's your second deal? I know you said you have two here. So let's hear another one.
Yeah. Well, the second one is just, I bought a house from a wholesaler. Or no, this one wasn't. We bought this one from a bandit sign. And this was my second rehab. And so we got it all remodeled, and it had flooded in the past, but I didn't buy it as a flood house. But then Hurricane Harvey hit the Sunday that we had our first open house.
Oh.
We had it remodeled and listed, and then Harvey hit.
Oh.
And so, yeah. And I mean, this is just something, not really being from the area. Like I knew about hurricanes, I knew about flooding, but I just, for whatever reason, I'm like, we're going to be out in 4 months. What are the odds?
Yeah. Did you have flood insurance on the product?
Yeah, I did.
Okay.
So I had a hard money loan, and they made sure I had flood insurance on it. Thank God. So that one flooded, and so we used the insurance to fix it up again. And then that market ended up losing $100,000 in about a year in value.
Boy. What area in Houston was this thing?
In Westbury. I'm sure some of you guys from Houston watching would know. So that's kind of like southwest, not far from downtown and the medical center and stuff like that.
Okay. Holy smokes.
Yeah. So, and I mean, this caught so many people off guard too. I mean, so many people lost their homes to flooding, right? But it was just something where I realized now, looking back, that it wasn't a flood zone, and I didn't know enough to really think it was an issue. And so now I learned, and so did so many other investors that had their homes flooded, as well as homeowners. But it's just one of those things. So we've had to learn how to recover from this. And like I say, you got to be strong. You got to figure out how to refinance. You got to figure out, so we got a tenant in now. We're still figuring out what to do with it. But a lot of people, I think, would give up. And it's just one of these industries that if you stick with it long enough, you get punched in the face a few times, but you have to figure out how to get around it, and then you're better. And I think the people that just stick with it and, roll with the punches, they're the ones that are successful in the end. And it's an incredibly rewarding business to be in if you can just get through the hardships and the dumb mistakes that everyone's going to make at some point.
They're inevitable. Exactly. I'm glad you mentioned that. I think mindset's like more important than the tactics, because if you have the wrong mindset going into this, like you could have had this debacle happen to you. You could say, oh, it doesn't work. I live in Calgary. Forget about it. But you didn't. You were like, no, this is part of the persistence test. I got to pass the persistence test, and you learn from it, and you're not going to let it happen again. So, I mean, I'm glad you shared that. That's why I love talking about, the best deal, the worst deal with everyone, because there's so much you can learn from experience, especially the bad deals, so.
Well, I listen to a lot of podcasts too, and hearing investors share some of their bad stories, it just makes me feel like, okay, like I'm not alone. I'm not the only business out there, or, if other people can get past this, so can I, kind of thing, right?
Exactly. It happens to everyone. You're not alone. Like, people think like when they're in the weeds, they're having a bad week or a bad month. They're like, oh my God, like the world is ending. It's like, that happens to everyone. But I think not a lot of this is why when I put out content on social media, like I like to kind of share like kind of counterintuitive stuff. Like, hey, I just did something really dumb and this is what I did. Because I feel like that, like for some reason, when people see that, they know, like it kind of gives you almost a little bit more credibility, because you're showing them like all like the ugly stuff that happens. And I show good stuff, but I think some people, they just try to show the highlights and it's all roses and sunshines, and it's just not, because those people are getting kicked in the face too. They're just not showing it. So I think the more transparent you can be, the better, for sure. And the more people will trust you, whether they're investors or clients. So awesome. So one more thing before we get into the end of this thing.
Sure.
What are some of your favorite books besides Rich Dad Poor Dad that have helped you on your journey in personal development and obviously in real estate investing?
Sure. I think one of the books that changed my life the most was Getting Things Done.
David Allen.
What's that?
David Allen, Getting Things
David
Done.
Allen. Just because I implemented his whole strategy into my life, like to a T.
Yeah.
And I couldn't believe how much I was capable of handling once I figured his system out. Like my wife was like, you actually know what the kids are doing this weekend? Like, like there's just so much. I was just so scatterbrained that I was just unorganized. I didn't know what was going on ever. And then suddenly I implemented this system where it basically takes everything in your brain and puts it into an organized system. And I was just like, okay, I can handle more. Let's bring on more projects. Let's do more. So that one I highly recommend to people as a non-real estate book. The Millionaire Next Door is another one I really like, because people have this persona of what rich people are, and it's always the ones driving the Lamborghinis and things like that. But that book interviewed a lot of millionaires and found that most of them are like, guys that wear dirty jeans every day and just go to work and work hard and keep their head down and aren't flashy and aren't glamorous. And I like that, because that's who I want to be.
Yeah, I love it. No, that's a good one. I remember I read that book right around the same time I read Rich Dad Poor Dad. And the guys were like, they were talking about how they buy like used cars and stuff, and just they keep it on the DL. But at the end of the day, you could be income rich, but let's say your income every month is 20K, but your expenses are 18 and a half. You got a Ferrari, but like you lose that income, you're going to the bankruptcy court. Like if your income is 20K and your expenses are 5, you got a $15,000 margin there, and you got some. I'm a big believer in saving. Saving to invest. I'm not saving to get the sick interest rates that the bank offer, but saving to have enough capital to then throw it into something that's going to get you wealthy. And you could spend it or you can save it. I think like Sam Zell is a billionaire real estate investor, and he talks about liquidity equals value. So the more liquid you are, the more options you have. And awesome. So great shares there, Cal. So if someone's listening and they're either in the Houston market or they're in Canada, we can talk about the stuff you have going on in the local Alberta area and also online once a month. How can people get in touch with you, and how can they add value to you? Is there anything you'd like for my audience? Maybe it's investors or deals or leads or wholesalers. Any way we can help you grow?
Sure. Well, I love networking. If anyone's watching from Canada, I do have a meetup that I run every month. And Greg, you were a guest on it last month, which was awesome. I had some response from people saying it was one of the best ones we've done. So that was great. But yeah, I mean, I love helping Canadians figure out how to invest in the US. We're a small population, so we're not going to invade you guys. We're not going to steal all your deals, I promise. But there is a lot more opportunities south of the border. And then anyone that's in Texas, I mean, we're always looking for people. We're always looking for private money. I mean, who isn't? So we work with private lenders on our deals. We also wholesale houses, obviously. So we're always looking for good buyers that want to do the fix and flips that we're not willing to touch anymore, stuff like that are more capable. So you can reach me at, the best way is info@karma-properties.com. My company down in Houston is called Karma Property Solutions. So you can just contact me there, and then you can find me on Facebook too. I don't know if you have show notes or anything, but
yeah, we'll as I publish these out, we'll do Cal, show notes, Cal Ewing on Facebook. Info@Karma, Karma Properties.
Karma-properties.com.
Karma-properties.com. Awesome. So Cal, I appreciate you being a guest, man. You've added a ton of value, and we talked about a lot of cool stuff. So guys, here's the takeaway: if you're thinking about investing virtually or whatever, it's possible. I remember a year and a half ago, I thought it was a shot in the dark. I did my first virtual deal, and the rest is history. So, guys,
stop making excuses.
What's up?
Stop making excuses.
No excuses, damn. Actually, that's a good book. There's another good book I want to plug. No Excuses by Brian Tracy. You guys, pick that one up and read it. It's a fantastic read and great audiobook. So, Cal, I appreciate your time, my man. Thanks so much for being a guest.
All right, Greg, appreciate it. It was fun. Bye.